Good morning, guys, and welcome to the show. Today is Tuesday, March 19th, 2019, and we're going to get right into it. We're going to start and open up the markets, and I'm going to talk about a couple things first. One of the things I want to talk about is palladium. So let's get started. Let's open up the charts right here, and the first thing is, palladium is shooting up awful high in price. It's soared to a new record high of over $1,600 an ounce, 27% up year-to-date on global supply concerns. Now, one of the reasons why I'm saying to be careful this precious metal is, there was a time, evidently a long time ago, with silver. I mean, back when silver was really cheap, The price shot all the way up to like 50, 60 bucks because it was the Hunt brothers cornering the silver market. But then once it was done, the price slumped back down again tremendously. And from what I understand, Putin is involved in this. Putin, the leader of Russia, is involved in this. And also automakers. Auto sales in key markets are slowing around the world, but demand for palladium, mainly used in auto catalytic converters in gasoline vehicles, has remained robust as manufacturers scramble to get a hold of palladium. So right now they're scrambling to get a hold of palladium, but sales of the autos themselves are dropping off a cliff because we're entering into a recession. So I could see all of a sudden palladium price could drop drastically, just like the Hunt brothers, all of a sudden the price of silver dropped back down again, after it was artificially up. So you got to be careful, palladium. Be very, very careful here. Now, in other words, tread carefully with palladium right now. The next thing I want to talk about is U.S. factory demand, U.S. factory orders. They're tumbling right now. And this is the way with recessions. Generally, on the lead-in to a recession, what you'll find is the market goes up and up and up. Everything goes up and up and up. Now, let's take a look at the lead-in to 2008. Let me narrow the charts in right here. Here was the lead-in to 2008 with the manufacturing. And look, we went up and up and up and up, and then we fell off a cliff. Okay? So now, let's move over and take a look at the lead-in to what's going on here right now. Well, okay, I'll have to move my chart this way. And let's take a look at this lead-in. Now, you saw that lead-in. See this lead-in. We're just at the start of it dropping. Could it drop off a cliff just like last time? Good question. Let me open the charts back up again, because now we're going to look at gold and silver price. We're going to look at the other aspects of the market this morning. That's U.S. factory orders, They're tumbling right now. We're starting a recession. We're going into the front leading edge of a recession right now. And there are a number of factors out there that could make us go into this recession really fast. Brexit is probably one of the number one things on my list, and Italy, of course, and Deutsche Bank. Any one of which of these things could just trigger the recession much quicker than the recession would take if we just stumble along into it. But even if we just stumble along into it, it's coming. And it's not that far away. If things are just beginning the real slowdown. And the reason why is because of quantitative tightening. Let's face it, the Fed's been pulling $50 billion a month, every month out of the economy for a long time. And they've been raising interest rates. They've overdone it. They've overcooked it. They're pushing us into a recession. And they still won't stop. They come on and they said, okay, we're going to be patient. But they never stopped. They're still pulling the $50 billion a month out. Okay, here's the silver price today. $15.37. We're up 4 cents so far on the day. But we're still in that range. Probably the center of that range is in around 15.30 right now. So we're at 15.37. Let's take a look at gold today. Gold price, $13.08. It's up $4.70. Looking good. Let's take a look at cryptocurrency. And we'll go to Bitstamp. 39.82, and she's swinging upwards right at this minute. Let's go to the 1 minute chart. Yeah, we see a little curve upwards in price right now. She's starting to heat up. Well, she's been heating up for the last couple of weeks. You know, the prices have been slowly going up. I shouldn't say slowly. We'll take a look at Litecoin in a minute. It's really increased its price. Let's take a look at cryptocurrency market capitalizations. The market cap on cryptocurrencies is 140,503,000,000 this morning, so 140.5 billion. Bitcoin dominance of 50.8%, and we're seeing all the coins moving up this morning. Now, I wanted to show you Litecoin for a reason. Here's Litecoin right here. Litecoin is over $60 right now. Did you know Litecoin broke down below $30 there at the bottom of this bear market? And it was only a couple months ago. You could have had them for 30 bucks, and now they're 60 bucks. Tell me what other place you can go out and double your money in a couple months, in like 2 months, other than cryptocurrency market, if you know what you're doing in the cryptocurrency market. Yeah, this is great, you know. Litecoin $60, but I can see a day in the not too distant future when Litecoin's going to break 1,000 bucks. I can see that coming. And I'm not talking 10 years from now either, you know. So let's move on with the markets. Let's take a look at the Dow Jones. Dow Jones Industrial Average, 26,037. It's up 123 points. Now, here's the thing. We're just getting through the Goldilocks rally. We've been in this Goldilocks rally, and it's still floating up higher. It's melting up into this Goldilocks rally. The higher it goes in this Goldilocks rally, the worse it's going to be when the next little problem comes in the financial system. Now, I can't tell you exactly what that problem's going to be. I think it's going to be Brexit, but I'm not sure. It could be Italy, or it could be China's slowdown, or it could be the real estate markets out there. But something's going to cause a problem, and not long from now, because there's too many things waiting in the wings. You know? It's like a boss, you know. He's sitting in his office, you know, and he says, "Oh, I just want to enjoy this cup of coffee, and I don't want anybody bothering me." But he's got a dozen customers out there who are disgruntled that can come in, barge in through the door and bother him. So more than likely, he's not going to get through his coffee before one of them barges through the door and has a problem or a complaint, you know, and he has to deal with it. That's the way with this thing. We got a dozen things waiting out in the wings, ready to bust in and take this Goldilocks rally from a rally into some sort of a sharp decline in the markets that frightens everybody to death. That's what it can turn into, you know. And the higher it goes, the sharper it's going to fall. There's an old saying, what goes up has to come down. Now let's take a look here at crude oil. $59.13 today. She's up 4 cents on the day. Now, this market here, this rally is all about OPEC. OPEC is controlling this, but that's why it's been such a slow rally in oil. Look at it, over months and months and months, just a slow increase in the price of oil. That's OPEC. That's OPEC doing that. Let's take a look now at bonds and rates. We see all the bond yields rising today. Now, for a long time, I've expected these bond yields are going to continue to shoot upwards. We've had this period of really intense bond buying, and I think we're coming toward the end of it. I think it's getting near its end, just like the Goldilocks rally in the stock market. I think is getting close to its end. I think this rally in bonds is getting close to its end, and I think we're going to start to see yields start to increase. And I'm not just talking a small amount. I think we're going to see the U.S. 10-year go up to about 4%. In the not too distant future, and the U.S. 30-year probably go up to like 5 or 6%. You know, this is what I'm expecting, and this is going to have the effect of bursting the real estate bubbles that are waiting to burst. This is going to burst them. This is going to burst. This is going to burst things. That's what it's going to do when these interest rates rise. The Fed, you know, they're trying to get interest rates up. They really want to raise interest rates, but at their FOMC meetings, you know, they want to raise interest rates, but he said patient, and the market is expecting patient right now, so he knows he better behave. He knows he better not raise interest rates right now, because he said patient, so he has to be patient. But the very next Fed meeting, they'll probably try to sneak one through. Okay, so here we go. We're going to look at the U.S. dollar index, 96.41 on the U.S. dollar index. She's running in that same range she's been running in for a while now, 96.41. So, listen, this has been your market report this morning. Thank you guys for tuning in, and we'll catch you again very, very soon. Bye-bye.